Hey everyone, welcome back to the Price Action for Gold channel. Today, we're diving into one of the wildest moves in precious metals we've seen all year. So let's get straight into it. Gold plunged 9% in a single session after hitting all-time highs just yesterday. Silver, even worse, down 28%. And it all centers around one announcement. Kevin Warsh is Trump's pick for the next Fed chair. So what does this mean for gold, for macro markets, and what should you actually be watching next week? Let's break it down. Joining me today is our expert financial analyst who's going to help us make sense of this wild price action and the macro shift behind it. Let's dive in.
Thanks for having me. This is exactly the kind of market event that separates process-driven investors from emotional reactors.
Quick reminder, this is educational content only, not financial advice. Now let's get into it. Gold hit $5,600 an ounce Thursday, a record high. Silver touched above $120. Then, Friday morning, Trump announces Kevin Warsh as his Fed chair nominee, and both metals absolutely crater. Gold down to around $4,900, silver below $87. Walk us through what happened.
This wasn't just profit-taking, this was a fundamental reassessment of risk. Gold up nearly 90% in 12 months. Silver, a staggering 250%. Those aren't normal moves. Those are crisis-driven rallies. The market was pricing in two major risks. First, that Trump would install a Fed chair who'd compromise central bank independence. Second, that the dollar's collapse, down over 10% in the past year, would continue. The Warsh nomination directly addressed the first concern and triggered a dollar rally that hammered the second.
But Warsh has been vocal about wanting lower rates. Shouldn't that be bearish for the dollar and bullish for gold?
You have to separate short-term advocacy from long-term track record. Yes, Warsh recently argued for rate cuts, but his history during 2008 shows he's a pragmatist and an inflation hawk. He criticized aggressive QE because he feared inflation consequences. Markets aren't reacting to what Warsh said last month. They're pricing in what he'll do over 4 years. The consensus, modest near-term cuts but no aggressive easing. That's establishment continuity, not radical change.
So the market breathed a sigh of relief because Warsh isn't the most extreme candidate?
Exactly. Warsh has 5 years on the Fed board. He was Bernanke's Wall Street liaison during the financial crisis. He brings institutional credibility. When investors feared Fed independence being compromised, that matters enormously.
Let's talk drivers. How did one announcement trigger a 9% gold crash and 28% silver collapse?
3 channels hit simultaneously. First, the dollar. The DXY jumped 0.9% after touching 4-year lows. When the dollar strengthens, gold becomes more expensive for foreign buyers. Demand dies immediately. Second, real yields. If Warsh is less dovish than feared, real yields stay elevated longer. Higher real yields are kryptonite for gold. They increase the opportunity cost of holding non-yielding assets. Third, risk sentiment. Gold and silver had become ultimate safe haven trades. Investors feared Fed credibility collapse, institutional chaos. Warsh's nomination said maybe we're not heading into monetary anarchy. That deflates the panic premium.
Couldn't this just be a healthy pullback in an ongoing bull market? Is this the end or just noise?
That's the question. Watch 3 things. Does the dollar rally continue? Does Warsh's confirmation reveal he's more hawkish than expected? And do geopolitical risks escalate or de-escalate? Gold's rally wasn't just about Fed fears. Ukraine, Russia, Middle East instability, tariff uncertainty. If those persist, gold still has support, but the parabolic, fear-driven part, probably over.
One analyst said parabolic moves have hair triggers and can reverse on psychology changes unrelated to fundamentals. Could this crash go further?
Absolutely. When assets go parabolic, the unwind can be just as violent. You get technical exhaustion, weak hands panic sell, momentum algorithms flip bearish. I wouldn't be surprised to see gold test lower levels before stabilizing. Without chart notes, I can't give specific levels, but watch for zones where long-term holders step back in. That's your value area.
What are the actual scenarios? What proves one versus another?
Scenario 1, gold correction is temporary. If the dollar's rally fails, can't hold above 97, and if geopolitical risks escalate or data weakens, then gold stabilizes and resumes uptrend. Confirmations: dollar weakness resuming, treasury yields falling, ETF inflows to GLD and SLV, gold holding above 4,700 to 4,800. Invalidation: gold breaks below 4,500, dollar breaks above 98, real yields push above 2.5%. Scenario 2, this is a deeper correction. If Warsh proves committed to higher rates longer and if the dollar rally extends, then gold enters sustained bear phase. Confirmations: dollar strength above 98, real yields climbing toward 2.5%, gold breaking 4,500, ETF outflows.
What's the biggest trap right now?
Assuming Friday's crash means the bull market is definitively over. Parabolic moves don't end with one 9% down day. We could bounce 5% next week, suck in dip buyers, and then roll over again. The flip side, catching the falling knife without confirmation. If you're not waiting for dollar weakness, yield cooperation, some stabilization, you're gambling on hope.
What's the one thing to watch?
The US dollar index. If DXY breaks below 96 and holds, that signals the Warsh relief rally is fading and gold could stabilize. Above 98 sustained, gold's headwinds intensify. The dollar is the primary driver. Everything else is secondary.
What should beginners focus on?
Don't trade the headlines. Build your framework first. Understand how Fed policy affects real yields, why dollar and gold move inversely, what geopolitical risk premiums look like. Right now, the environment is shifting from Fed credibility crisis to Fed normalization with a pragmatic chair. That's a regime change. Wait for confirmation before assuming you know what comes next.
Process for next week?
Sunday or Monday, check the economic calendar. Job reports, Fed speakers, inflation data. Mark psychological zones like 4,500 or 5,000. Ask, is this regime shift permanent or a shakeout? Daily, don't react to every headline. Filter noise by focusing on dollar direction, real yields, geopolitical developments. Reassess when invalidation triggers hit. Let the market tell you what's happening.
How do you avoid confirmation bias?
By asking, what would prove me wrong? Define exactly what invalidates your view. Watch those levels religiously. When invalidation hits, adjust. Don't fight it.
Quick recap.
Gold crashed 9%, silver 28% after Warsh's nomination restored Fed credibility. Dollar rallied, panic premium crushed. Scenario 1, dollar weakens, geopolitical risks stay elevated, gold stabilizes. Scenario 2, dollar extends higher, Warsh proves hawkish, deeper correction. Watch the dollar index. Below 96, bullish for gold. Above 98, bearish. The trap is assuming this is definitively over or a guaranteed buy without confirmation. Next week, watch Warsh comments, dollar momentum, whether gold holds 4,500.
That's it for this week's breakdown. Thanks for breaking this down with us. If this was helpful, hit that like button, subscribe, and check the description for article links. See you next week.
Thanks for having me. Thanks everyone for watching.